All right, another week getting started. We do have a lot to talk about today. We just had the release from RBA this afternoon. So, majority we're going to be talking about, hopefully you guys can see that. Okay, there you go. Majority we're going to be talking about the RBA decision as well as the Japanese yen strengthening. Okay. The Reserve Bank of Australia, if you guys don't know, they had the decision of cutting 25 basis points after a long time. All the other central banks were cutting 25 basis points, and they were the one that weren't. So that was a big take for the market. As well as we had the strengthening of the Japanese yen following some positive economic data from Japan. So basically, over the next couple pretty much an hour, 45 minutes to 1 hour, we're going to be covering those topics. So understanding the RBA decision, we're going to dive actually deeper on that. So we're going to go to the RBA website. I'm going to share how you can get access to those meetings, reports. We're going to have a look at market reaction to the RBA decision, as well as comparing the RBA stance with other central banks, because that's the most important thing. The 25 basis points cut, congratulations, everyone knew it. And now we need the comparison between RBA and, let's say, BOC or BOG or ECB or Fed or whatever, RBNZ. We need to be comparing those central banks, because that's what will give you the trade, not only the rate, okay, the rate decision. And then we're going to touch base a little bit on the Japanese yen. I'm waiting to some data to actually tell if that's going to be a really good trade or not. But the strengthening of the Japanese yen, as well as the market impact of the Japanese yen, is strengthening. So as usual, just before we start, I'm going to do the risk disclaimer. I'm going to leave it there for a minute, pretty much. And then you guys just go through, read it, everything. And we should be ready to start. And then I come back and we should be ready to start. Okay. So I'm going to mute myself and come back in a second. Okay. I think we should be good to start. Let me get out of this. Let's come back to here and go to here. So that's the RBA website, so the Reserve Bank of Australia. If you don't know how to get there, don't worry. I'm going to teach you today. So there's two ways, pretty much. One way is clicking on the link I'm going to send on the chat here. I think that's the simplest way you can do. And the other way is opening up a Google tab and typing in RBA, okay? And then click enter. And then the first website, it's the one that you will be looking to click. So once we're here, that's the actual official website, okay? So there's nothing here that is fake or anything like that. Same as go for other websites from other central banks. To get the actual monetary policy speeches or decision, etc., usually they have on the latest news. So right here, we have news and announcements. Oh, well, first of all, you have the inflation and you have the cash rate target. So the cash rate target, being very, very quick here, it's the interest rates. Okay, so the cash rate target is the rate that the central bank passes on to commercial banks. So central bank is the RBA, and let's say we have, I don't know, NAB, that's the National Australian Bank, that is this bank here. All right. So that's the National Australia Bank. So the cash rate will be given to NAB is 4.10%. Then if I'm a client from NAB, or I'm looking to purchase a house or go to a broker, and then he finds me a good deal with NAB or Commonwealth or whatever bank it is in Australia, I will be paying at least 4.10% plus the interest on the top of my loan that they think is on my profile. So if I'm looking to get $1 million loan to buy a property, and I have $100,000 deposit, so I'm going to be asking for $900,000. From that $900,000, they will be seeing my credit card, my scorecard, my credit score, if I have any other loans, if I have any debt, if I have a business, if I have multiple funds, multiple ways of income, etc., and then they will charge you whatever they think it's worth for the risk of giving money to me. So let's say it's 2%. So I will be effectively paying for a 6.10%, 4.10% from the cash rate plus 2% from the actual NAB. All right. So that's the interest rate, and this is the cash rate. Okay. Hopefully you guys could understand. It's pretty simple. Now, if you have the inflation, we have the consumer price index, and we have the monthly indicator from December 2024. We didn't have the release yet for the January. So the consumer price index at the moment is at 2.4%, and the monthly indicator is at 2.5% for the month of December. January most likely will have somewhere around the same similar mark. And then we have the exchange rate, US dollar and Chinese yuan, Japanese yen and euro, and the trader index. Okay, so if you scroll down a little bit, news and announcements, you have monetary policy decision, and you have the video conference. Okay, so if you click on here, we're going to open the watch now, and then you have the video here from the conference, and when it comes to exactly the same as the Fed, asking questions, etc. Okay, it's not much what we want, but of course you can watch it later. And then we have the statement by the Reserve Bank Board, the monetary policy decision. And that's exactly what we need. Okay, so we're going to go back to that in a second. As well, we have the statement on monetary policy. Okay, so that's a little bit different. It's more compact. It's basically saying in a brief scenario. Oh, well, it's exactly here. In a brief, basically saying that everything else we have on here, but on a compacted version. Okay, because this guy here, it's much faster for you to read. Okay, so if you click on read full document, then you have a lot of things. So the global outlook, economic conditions, and the overview and financial conditions. But we don't need that now. We need this one here. So to start with the RBA decision, for those who don't know, they've done a 25 basis points cut. They were pretty much one of the central banks that was holding the most longer. Okay. Sorry, didn't get you quite well. As a governor, need to know the impact on market. So if you can just sort of explain me better on that, I would appreciate. So for those who don't know, the RBA has done a 25 basis points cut, and that's very important. Okay, the population in Australia, for those who don't live here, I know there are some people that watch us, watch those webinars, and they do live here, and they can sort of compactuate with that. But the life in Australia has been getting harder and harder and harder because the economic constraints are actually going to the public and to the society. The inflation is coming down, but the price index is not coming down. Okay, so if we have a perception, let's say, of inflation at 4.10%. 2.5%. But then, inflation is coming down. That's fantastically good. But then the prices is continually increasing because other aspects. Well, that's exactly what is happening here. So it doesn't matter. The banana price are now like $6 a kilo. The egg price is $14 for 12 eggs, okay, and so on. So it's getting pretty hard. Shelter prices, rental prices are going higher as well. Let's see how it goes with this new rate. It's going to pass it on to landlords, but my thinking is that the problem will only persist and not decrease. Anyway, so they start saying, as it's meeting today, the board decided to lower the cash rate target to 4.1% and the interest rates paid on exchange settlements balance to 4%. It seems AUD is still strong after the cut. Yeah, it is. We're going to get there in a second, okay? So the underlying inflation is moderating. Inflation has fallen since the peak in 2022 as higher interest rates have been working to bring aggregate demand and supply clear towards balance. In December quarter, underlying inflation was 3.2%, which suggests inflationary pressures are easing a little more quickly than expected. There has also been continued subdued growth in private demand and wage pressures have eased. These factors give the board more confidence that inflation is moving sustainably towards a midpoint of 2 to 3% target range. However, upside risks remain. Some recent labour market data have been unexpectedly strong, suggesting that the labour market may be somewhat tighter than previously thought. The central bank forecast for underlying inflation, which is based on the cash rate path implied by financial markets, has been revised up a little over 2026. So while today policy decision recognized the welcome progress of inflation, the board remains cautious on prospects for further policy easing. Okay, so that pretty much answers your question of why the Australian dollar is keeping strong. Let me get a pencil here to highlight a few things. This one, yeah, in green. Okay, so there's a few things, okay? When we see the underlying inflation is moderating, so that's pretty good for economic, the inflation is moderated. And they say that the inflation has fallen substantially since the peak of 2022. And there is actually been pretty good fall. But so if you look at the last paragraph here, so while today's policy decision recognized the welcome progress of inflation, so basically they're saying that, okay, it's good, the inflation has been coming down, so here it is, a 25 basis points cut, the population is asking for it, the banks are asking for it, everyone is asking for it, we have to cut, so let's cut. Not because they can, not because they need, not because they want, okay, not because they can, it's because they need to cut, because the population is asking for it. Okay, so it's really, really frustrating when that happens. And then they reiterate, the board remains cautious on prospects for further policy easing. So this here, exactly this point from here to here makes a total rip difference of somewhere hawkish. Okay, and why is this? Because they're pretty much telling you that they don't know if they're going to cut again this year. They remain cautious on the prospect for further policy easing. So they don't know. They just gave this cut because they had pressure on their hands. Okay, simple. Second, the outlook remains uncertain. Growth in output has been weak. Private domestic demand is recovering a little more slowly than earlier expected, and there is uncertainty around the extent to which recovery in household spending in late 2025 will persist. Wage pressures have eased a little more than expected. Housing costs inflation is abating, and business in some sectors continues to report that it has been hard to pass on cost increase to final prices. Well, of course, because the population is not spending much. At the same time, a range of indicators suggest that the labor market remain tight. In fact, tightening a little further in late 2024. Measures of labor under-utilization have declined, and business service and leisure suggests that availability of labor is still a constraint for a range of employees. Furthermore, productivity growth has not picked up, which implies that growth in unit labor costs remains high. I think if we just stop for a while and think about what is actually important into the economy. I mean, not into the whole economy, but for your own economy. You need to work. You need to get paid. You need to have a property to live in. You're not going to live under the bridge. And you need to have food to eat, right? So basically, all of these, there's a name for that, I forgot. All of these simple things that you need to live is getting expensive and expensive. And that the market conditions remain tight, okay? So not that good as they are painting the picture. So on the last end here, it's what is pretty important for us, okay? So if you look here, uncertainty about the outlook abroad to remain significant. Geopolitical and policy uncertainties are pronounced and may themselves bear down on activity if households and firms delay expenditure pending great declare on the outlook. And then these three lines are the most important. So most central banks have been easing monetary policy as they become more confident that inflation is moving sustainable back towards their respective targets. So, so basically they're saying like, the Fed has been that has been easing. The Bank of Canada has been easing. The ECB, the BOC, the Chinese bank, everyone is easing, but not us because we are not confident that the inflation is moving sustainable back towards the respective target of Australia. And then they add a little bit more. So the market expectations for further easing have moderated somewhat in recent months, particularly in the United States. So basically they're saying that people are not believing on another cut into Australia. And that makes the Australian dollar a bit more stronger than, if this reading was just full cut and etc. And yes, particularly in the USA, because everyone was expecting 3 to 4 cuts this year. So 75 to 100 base points cut, but now they're only expecting 1. So yeah, they are correct on this one. Sustainable returning inflation to target is the priority, and that should be it. So we don't need to read this because that's pretty much them saying that they have the I forgot the name. They have the need to bring inflation down towards target, and that is the priority for them. Okay, so let me ask you guys, does anyone have any questions about that, or was it pretty clear, or do you need more to know? No questions? Okay. Now, so sorry, I can't pronounce your name correct, but I'm gonna mention your surname, Augustine. So Augustine have done, the comment saying that it seems our AUD is still stronger after the cut. That is correct. So I'm just drinking a bit of water. So if we look at here into the chart on AUD USD, So that's the 1 hour. Is that the correct price? Let me just have a look again. 54.3. Yeah, that's the correct price, because sometimes FinLogics don't have the correct price. But okay, that sounds correct. So if we look at the 15-minute, sorry, the 5-minute, so we saw this, okay? Let's zoom out. Oh, sorry guys, I'm using FinLogics. Is correct price. So I'm using FinLogics here, so if anyone wonders. Now, as soon as the release gets out, mixed reaction so far on all monetary policies. So if we look at the chart, we saw that soon as the candle of the 5 minutes from 2:30 opens, that's the release. The market was already expecting a 25 basis points cut, because if we look at the economic calendar, the expectation was already a 25 basis points cut to 4.10%, not New Zealand, Australia. So right here, okay. How long did they have? They've maintained it for that higher until 4.35 since 2023. So the whole 2024. Once the policy came out, the market reacted down and then heavily upside, upwards, and then now heavily down and then up and then sideways now. So remember, I think it was maybe 2 weeks ago, I can't remember, I think it was on January, I've made a webinar telling the difference between the forward guidance, the actual guidance, the monetary statements, etc., etc. So these has always different impacts on the market. So the first impact is the forward guidance. The forward guidance is exactly what the RBA have done here. So there you go. So while today's policy decision recognized the welcome progress on inflation, the board remains cautious on prospects for further policy easing. So basically, they're giving to us a forward guidance. They're guiding us for the forward monetary policy. And what is the forward monetary policy? The prospects for further policy easing still hard. Okay, they don't know if they're gonna cut again. And if we look for the RBA rate track, this one here. The next meeting, they are expecting. Oh, sorry, they didn't. Oh, wow. They don't have for the next meeting. I can log in later. So basically, what I'm trying to say is that the market is not pricing in anymore another 25 basis points cut. It reacted upwards, good, because of this, okay, because of making the Australian dollar strong, and not because of the cut. Remember what I always say. The market was already expecting this, okay? It was the forecast. So if coming as the forecast, there's no change. And you have to sort of getting to know the market, talking, going to different forums, start to reading the ACY blogs we post. I've been talking about a 25 basis points cut for a while already, okay? But the big thing is that what they say here, that they don't know if they're going to cut again, made the Australian dollar strong. Then the market sells off normally and now sideways. So let's get out from the 5 minutes and go to the 1 hour now. Combine it with the monetary policy decision. We had the Trump last weekend saying that he will put 25% tariffs on aluminium and steel, and then on Monday, during the weekend, Australia is a bigger producer of commodity, especially steel, coal, as well as aluminium, gold, etc. So Australia dollar weakens a lot, and Australian US dollar strengthens a lot. And then Trump comes and say, look, we're not going to do 25% in Australia because Australia is our friends, etc., etc. What happens? Go up sideways. and then up again. So this up move was already precifying that 25 basis points cut with a hawkish forward guidance. Did you guys understood that? Because that's what has been happening on the market. It's literally clear as that. What can possibly happen next? Well, that's the question I'm here to answer, everyone. In my opinion, with the rates getting to 4.10%, they will be having somewhere of a stimulus on the economy. So the data from GDP, PMIs, etc., will come a little bit higher. Okay, but with that, the population will be looking to spend more money as well. Okay, so the money becomes a little bit more real value than what it was with the big inflation. So if population is spent again, if CPI then increases the inflation pretty much, what can possibly happen is they're not going to cut again. And if they don't cut, the Australian dollar remains strong. So there's two scenarios. First scenario is growth on the economic data. That means GDP, PMI, CPI, BOPs, balance of payments, etc., etc. And the second thing is that the inflation will continue to be at those levels. So there's another year or so for the inflation to come back. Luckily, us that the interest rate is lower, so we can, some of the products will come on a lower price for us. But again, what can possibly happen here is a down move, like a pullback, and then a continuation up for the longer term. Okay. So that's my sort of prediction for the Australian dollar. Did I make myself clear? Does anyone have questions or anything? Now's the time before we move to the next subject. Questions? Okay, clear. That's good. I think so. Now, comparing the RBA with other central banks is the most important thing. With this instance, exactly these three lines, more likely two lines, with other central banks like the BOG, for instance, or the Fed, I don't know, other central banks. While the Fed has maintained a very data-driven approach in, evaluating inflation pressures, labor market, etc., before making further moves, the RBA decision today provides us some insights into how the central bank in different regions are managing the economic uncertainties. As the Fed is more analyzing the data to take action and actually make that available to us. As of the RBA, we don't quite know what they're looking much and how they're going to take the next steps. We know now that they're not going to plan to, cut another 25 basis points. So it will be pretty interesting to see from now. In my opinion, from AUD, I think the best trade we can take from that is actually AUD USD. Okay, AUD USD can be looking for us to go long. Again, I wouldn't be looking to trade AUD JPY. I know it sounds good, but if we zoom out, sorry guys, if my voice is not that good, my rhinitis has been attacking me a lot, so my nose is blocked. So the AUD JPY, I think Japanese yen is really, really strong. I'm going to touch base that in a second, but I would maintain my long on AUD USD. Okay. Now, we cover the RBA decision, we covered the market decision, and we covered the comparing the RBA stance with other central banks. Now is the strengthening of the Japanese yen. Okay, so the Japanese yen has been gaining strength recently. Let me get this one here and zoom out. Let me check if the price is correct on this one as well. So USD JPY now is trading at, there you go, 151.9. Yeah, so that's not the right price. 51. So that's not the right price. Let me use Trading View. Okay, cool. So USD/JPY has been trading down because of the Japanese has been gaining some strength. Okay, and that's due because of the positive economic indicators coming out from Japan to yesterday, as well as last week. So the shift, has surprised many people who had become, let's say, normalized about the weaker Japanese yen, especially given that the Bank of Japan had the ultra loose monetary policy over the past decade, and people were looking to them and like, oh, okay, they're not going to do anything, and because of that, we're just going to keep short in Japanese yen. Until this exactly day here. Remember, I was in the office 1 p.m. and then weather comes in and say, look, I don't know why we shouldn't hike the interest rates if the data is getting good, it's coming good. Market reacts immediately and then range sideways, and then we have the increase of 25 basis points, and then market now melts down. So think about it, okay? Japanese bank, so the Bank of Japan, is the only one hiking interest rates as all of the other banks, the central banks, are cutting. So what would you do? Would you, if you have $100 million to invest somewhere, would you buy US 10 years or would you buy Japan 10 years? Well, I think the smartest decision here would be buying Japan, because when we look to US, okay, the rates may be higher, but for now, if we have Bank of Japan continue to hike the interest rates, we're gonna get paid much more in Japan than US. So all the money that were in US is now moving down to Japan, and consecutively, okay, and that's pretty interesting because the Japanese yen currency, the Japan currency, the Japanese yen, is strengthening every single day. My take on USD/JPY is a continuation downwards until 150. Okay, so if I get here, 150. And the reason is pretty simple. We had this little box, and let me go to the 1 hour. It's easier to see. Price is the same on everything, but just so you guys can have more clarity. So we had this box here that I were aiming, and we got target hit. And now I'm aiming this one here, somewhere around here. So get this rectangle right here. Okay, so we have this one now that I'm looking to short until there. It's not the best risk reward trade, but it's a good trade. Okay, so we have somewhere around here down to here. It's not, as I say, it's not the best risk reward trade, but it's something that we can couple off, and there's definitely some momentum that will go on very soon. With the Japanese yen strengthening, I think I have Euro JPY short as well. And I can't remember what's my TP. Let me check here. I think that's a swing trade position. Euro JPY, I'm looking at 150 as well. So 150. That's my trades, guys. You don't have to follow my trades. I'm just showing why I'm looking to trade Japanese yen strengthening. So 150 is my target. I know it's a huge target, but there's definitely potential, especially on this pullback now. I think that's a pretty good spot to be trading short, somewhere around here. Doesn't have to be this big, the stop loss, but it's a pretty good risk reward. 1, 2, 3. Someone sent me a message. So I'm looking to short Euro JPY as well. Oh, that's good. Yeah. With the Euro, there's only a few things that I would be paying attention. The first thing is the Euro is going up at the moment. So if we look at the Euro right here, so Euro against the US dollar has been going up from the 25th, from the 3rd of February to now, we've been going up. It's not the hugest up move, it's just like 2.4%. But it's an up move. The reason has been two reasons. Okay, so the first reason is that the winter in Europe is not that cold, so people are not using much gas, and the gas price is down. So if we look at, I don't think TradingView has anymore. Yeah, they don't have the ticket anymore. But the gas price is not high as it was on COVID. So that's pretty good. Second point, and that's the most important one, is actually what is moving the market. A call from Donald Trump, with Donald Trump and Putin. I don't know if you guys have heard of that, but call from Trump and Putin. So right here. So after Putin call, Trump says negotiations to end Ukraine and Ukraine war talks, and they looking to stop that war. Okay, and that's exactly what I say. I think what I say one of my friends. From day one to now, Trump has been doing what they say. And what everyone wasn't expecting is that he would do what he say, and it's happening. So it's pretty interesting. Now, coming back to here. So with those conversations, we may continue to see the euro dollar going up if the war actually, ends for real. If Trump and Putin can come to a stage and they say, look, man, it's over it, then congratulations. Euro dollar would be really, really strong. Okay. So we'll be shooting up. But coming back for Japan, I think Japanese yen is a good currency to be looking to short. And I'm definitely shorting USD JPY. Guys, I think that's pretty much it from my side today. We had quite a few talks. We've done an in-depth overview for the RBA. We had a look at the market reaction and why did the market react up, and the Australian dollar. Comparing the RBA stance with the other central banks and why is important the forward guidance, and that's what actually make the market reaction up. The strengthening of the Japanese yen, and I think it will continue to, and the market impact of the Japanese yen strengthen. I will be here tomorrow as well from 5 to 6, so hope to see you guys here. It's a bit of a different one. We're going to be looking to trade together with FinLogic's tool. But yeah, thank you so much for coming, and I see you all tomorrow. See you guys. Take care. Bye.